We are sitting in a time of the year where you probably have admits from your dream universities and you're evaluating education loans. Studying abroad is expensive and most of you will be taking an education loan. Now, this video is going to clear all your doubts. If you have the following questions such as, what are the different types of loans? What are the interest rates going around in the market right now? Up till what amount will my education loan be sanctioned? And when can I start repaying my loan? Can I do it after I get a job? And several others. This video will have answers to all of these questions. So if you're interested in that, stay tuned. Alright, so let's dive right into it. The first part of this video is going to discuss the different types of loan providers. Now, there are three distinct types of loan providers. Number one are public sector banks, number two are private sector banks, and number three are NBFCs. Public sector banks could be institutions like the State Bank of India, Punjab National Bank, or Bank of Baroda. Some private sector banks include ICICI, HDFC, and certain others. NBFCs could include institutions like HDFC Credila and Empower. Now, the difference between these three institutions are a few. Number one, the rates of interest might vary. Typically, what we've seen is public sector banks offer the lowest rate of interest. This could vary anywhere around the 9 to 11% mark, but fair warning, with all these percentages, it varies from person to person. Private sector banks can offer loans in the interest rate of 11 to 13% on an average. NBFCs start at about 11.5% and then they go up. Now, with these interest rates, there is a common pitfall that I need to warn you about, but you'll have to watch till the end of the video for that to be revealed, because it's a common mistake that people fall for. Now, the way you differentiate whether you want to take a loan from any of these three entities will depend on collateral versus non-collateral. In most public sector banks, or rather in almost all cases, they will require you to put down some sort of collateral. Therefore, if you have collateral to put down and you're going to a good university, don't worry about it, go with a public sector bank, because you might get the lowest rate of interest. More about that a little later. Now, certain private sector banks have started to offer collateral-free loans, but in most cases, they will require you to put down collateral as well. This is where NBFCs come in. NBFCs provide collateral-free loans and they sanction up to 50 to 60 lakhs depending on the university that you're going to. Of course, with the private sector banks, if you're putting down collateral, that amount can be significantly higher. Alright, so how is this loan sanctioned and when do you have to repay these loans? You have to understand that the entire amount that is written on your loan sanction letter is not given to your account at once. It is only disbursed in a semester by semester basis depending on your need for paying the tuition fee. Therefore, you are billed in terms of interest rate only after the disbursal amount is done. You can absolutely repay this education loan after you finish graduating from your master's and when you start a full-time job. If you go to a good university, in most likely terms, you will be able to repay this loan in somewhere between 1.5 to 2.5 years. So if you're doing a STEM designated degree in the US, you should be fine in paying it off in the OPT period. Alright, coming to the third part of my video, common pitfalls and mistakes you should avoid. Number one tip, most important, please take this seriously. Do not take the education loan amount for your entire cost of attendance. What I mean by that is you should take the loan only for the tuition fee, your cost of education at the university. Try and cover your living expenses through teaching assistantships, research assistantships, or any other on-campus jobs. You can very easily do that. And I've done a deep analysis of how several students in different parts of the US are doing this in this video right here. If you take your loan only for the tuition fee, it's a far less burdensome loan and therefore you can repay it far more easily. You can cover your living costs through other means. Second point to keep in mind, like I promised earlier in the video, the interest rate. Please check if the interest rate is a flat rate or a floating interest rate. Now, most institutions at this point are offering only floating interest rates, but I've seen education loans that have started at an interest rate of something as low as 11% go up to 14.5, 15% over the months in the past as well. So please be sure you're aware of these terms and you're prepared for them. The third thing you have to keep in mind, and of course this is a less serious problem, if you plan to take a loan from a public sector bank and you're putting down collateral with the lowest interest rate, which is all wonderful, just be sure that you're starting early, because these banks take a lot longer in terms of their processing time. Considering that you have to apply for a visa and you have to get your visa slot and fill up your post-admit process docs, you need to give yourself ample time. Now, if you want to get quotes from NBFCs, public sector banks, private sector banks, or want general personalized advice in terms of how to go about the education loan process, comment on this video below stating loan and a really friendly person will get in touch with you to discuss the same. Now, I hope that this was a lot of information packed into a short video which you found useful. If you did, please like, share and subscribe. It will encourage us to put out more such content. We also have an entire post-admit process playlist which you can access by clicking right here.